Real estate's a beautiful thing because you can start it as a side hustle and you can invest while working a full-time career. And you don't have to retire yourself early. Some people want to do that, some don't. Maybe some people want security, some people want to scale back or retire a spouse. So real estate can be all of those things.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Zach Lemaster. He's the founder and CEO of Rent to Retirement, the nation's leading turnkey investment company. Zach is a seasoned real estate investor and licensed broker that has accumulated a large portfolio of rental properties. Zach, as I mentioned sort of before we started recording, my goal here is to let you tell your story in your own words. So I'll stop there with the intro. But first, I just want to say thank you for taking the time out. Thanks for coming on the show and being here to share your story and your business.
Yeah, absolutely, Jason. Appreciate you having me on here. And I'm excited to hopefully share my story to add value and some nuggets of knowledge for your audience.
Yeah. And I'm sure that you will. Let's just start with your story. Let's start there, your background, your story, kind of what brought you to where you are today. And then we'll just dive in from there.
Yeah, cool. So I have a background, nothing to do with real estate. I run a very large scale and active real estate business today. That's Rent to Retirement. We're the nation's leading turnkey investment company as well as build to rent company. So essentially, we identify markets that we see positive opportunity in, and then we build houses or renovate them, lease and manage them for our investors. And we help our investors achieve financial independence through being somewhat passive investors, owning these assets in positive markets. So regardless of their experience level or their or where they're located, they can participate in some of the best markets in the U.S. But I didn't start in real estate like many people that find themselves full-time in real estate. I have a background in healthcare. My wife and I are optometrists by education. I was an Air Force captain for 7 years as I was on scholarship. So joined the Air Force. That's where I started investing in real estate. First house I bought, duplex. This is probably about 16, 17 years ago at this point, but rented out half, lived in the other half, did the house hack thing, used a VA loan, no money down, fell in love with real estate, never looked back. Always bought real estate every single year. There's not been a single year since that first duplex that I haven't bought real estate. I'm not saying I've made money on all those deals. But of course I stayed consistent. And that's, I think, Jason, the key to success is staying consistent. And of course, knowing your why is huge in that, right? Because there's all sorts of investing in anything, especially real estate, growing a business, like there's a lot of challenges. It's not easy. And so having a strong why, I mean, I love the name of your podcast. I thought I mentioned that. But there was this pivotal moment, though, where my wife and I, it changed the trajectory of our lives, really. And this is where we started investing in real estate more intentionally, not just investing locally where we were at, because that's what we felt comfortable with, but actually intentionally choosing markets where we saw the best opportunity, where we saw the best growth, a undersupply of housing. And by doing that, actually being intentional around where we invested, that allowed us to really scale our portfolio rather quickly to replace both of our incomes earlier in life as optometrists. So, fast forward to where we're at today, we work across 18 different markets. We're helping people essentially do the same thing that we did, investing in the markets that make the most sense, and where our teams kind of handle everything for them. So that's as quick as I can give you, Jason.
Yeah, and I hope I didn't give the impression you had to rush through it, but no, it's fascinating, and it's interesting. We're over 400 episodes now, and I mean, it's probably like less than 10% of the guests that have always been in real estate, like come from some other background, whether that's tech or healthcare or attorneys, CP, just like people. And a lot of times it is where you kind of get that first taste. Sometimes people refer to it as being that accidental landlord. Sometimes it's more intentional, but ultimately it doesn't always start out with a intent to kind of scale to create a business out of it. So I love that the sort of varied backgrounds. When you started, you bought that first duplex. Was your goal to get into real estate, or was this like, hey, this will be a way for us to help afford our mortgage and kind of just set you in the right foot from a financial standpoint.
I think I had early on, like many people do, read the books and listened to the podcast years ago, and all the Kiyosaki saga and all the other things. But I believe that I wanted to invest in real estate. I mean, when I first joined the Air Force, I was fresh out of optometry school after 8 years of professional school and hundreds of thousands of dollars in debt, even though I did have an Air Force scholarship for part of that. But I didn't have any money to invest previously to that, but I wanted to be intentional and smart with the capital that I was now earning. A lot of the military guys, they get their first paycheck and they blow it on a sports car or something like that. So I wanted to at least be thoughtful and smart with my money. And so real estate was kind of what I was learning about at that time. And it just made all the sense in the world to buy a duplex where, I could live for free, saving housing expenses, because the tenant in the other unit was basically paying everything. It was about break even, but I was living for free. Yep. And then I learned, just through doing it and owning it, I learned about the tax incentives and benefits to owning real estate. And I was like, oh, I can grow equity in this house and then sell it after a couple of years since I lived in it without paying capital gains. Or if it's an investment property, I could have 1031 exchanged it. But just learning about that, learning about the benefits, from appreciation and leverage. I put zero money down. My return on investment ultimately was infinite because I was no money into the property. So, and that just really got me hooked. And so from there, I just kept investing. The next year, I bought, I think, a single family that was a pure rental. That was my first rental, and then the next year, bought another one. And I mean, that was kind of the starting point.
Yeah, and it's, you said that you've bought real estate every year. They haven't all been successful, and I think that that's actually like a pretty important piece of that message to highlight for people, because it's interesting that people will invest in the stock market, and that might not be them sort of managing it, but you think about like a 401k or an IRA. Those things go up and down. There will be, especially if you're not managing it, or you are, like, there will be stocks that you lose money on in the end. Hopefully it's a positive, a net positive. But and I think, I don't know what it is about real estate that it's an investment. It's not different in that sense. It's still an investment, and hopefully you make money on every one, but it's not going to be a home run every time. And there will be times where it doesn't go well. And there's often a lot of fear, for whatever reason, around the chance of a real estate investment going bad, but seemingly less fear as people dump money into a 401k or an IRA that they don't even have control over. I wanted to hear your perspective on that, because you did mention I didn't make money on every single one, and I think, like, that's okay, because overall you've replaced two optometrist surgeries salaries and been able to be successful. So, I mean, talk a little bit about that and your perspective around that.
Yeah, it's changed over time. And I think that, there's a saying I heard that stuck with me, and it's something along the lines of, like, time heals all wounds in real estate. And that could be true for, investing for the long term for a lot of different things. But certainly in real estate, it's like, it's a little bit more active. Generally speaking, when people invest in real estate, whether you're self-managing or you're even investing with a turnkey company like us, where we handle everything for you, which is more on the passive end of the spectrum, maybe not completely passive, but those are people that are doing it intentionally because they're actively learning about real estate. They're not taught about real estate. When you're investing in a 401k or the stock market, I would say most people honestly don't even think about that, right? It's just they mentally check out. They don't look at it. Maybe they do occasionally, or they hear something on the news which sparks them to go look at it. It's like, oh crap. But it's that's a more common way to, I just think, generally invest and think about retirement. And I won't get too much on my soapbox here, Jason, but I have yet to find a person that has comfortably retired through a 401k. I just haven't. And I'm happy to get into, like, my why, and like that plays into my, like, true why with like my family and growing up. But thinking about real estate, it's, there's a lot of noise that happens, whether you're self-managing or not. It's like, oh, you got to do repairs that takes, money injected into it. The tenant could be late. Like there's fluctuations, right? And there's a bunch of this extra noise, and sometimes people get stressed out about that and frustrated. But generally speaking, like that's just part of the game, right? If you're going to own physical real estate, like those things happen. But if you truly understand the math around real estate, then it kind of makes that journey worth it. Because you can have repairs on a house, right? And you can have tenants that you have to evict or that don't pay rent or whatever the case is. But even while that's happening, the house is still likely appreciating, even with short-term fluctuations. All real estate goes up over time. I mean, inflation works to your advantage when you own physical assets like that. You're using leverage. You're using the bank's money. You still get these insane tax benefits that you do not get in any other asset class, even if you're like have a 401k or IRA or something like that. Like the massive tax benefits are just really what allow you to compound. I'd be happy to talk about that as well. But like we run a very large scale business at this point in life, and our goal is to buy enough real estate every single year to offset our tax liability every single year. That's a significant amount of money that otherwise we'd give to Uncle Sam that now we can reinvest in, like again, have an infinite return on investment, because we would have never had that money if we didn't save the money through real estate investing, and allows us to buy other assets. Like that alone is really what allowed us to replace our active income in like 6 or 7 years. It's just doing all these things collectively, intentionally on where we invest, maximizing the tax benefits, but I think that real estate, when people get so hyper focused, especially as a new investor, focusing on the short term, not reminding themselves of their why, or their like the long term aspect of how the math works out over time. Whereas the stock market, like you have zero control. It goes up or down. You can complain about it, but it is what it is, and most people probably aren't watching it. So that was a long answer, but that's kind of my opinion.
No, and I agree with you. I mean, I think that the concept of a 401k is probably outdated. I don't think it's a bad thing to have exactly, but it's still it's probably yeah. I doubt that anyone ever just retires and like, good thing I have this perfectly set up 401k that will fund my entire retirement. But what is so? This is basically a two-part question, Zach. One is kind of when did you transition from real estate for yourself to starting to create a business around providing rental properties and management for other people, and what, I guess, expand on what your business model is like. If someone comes to you as a customer, what exactly is kind of what they're going to get?
Yeah, let me start with that question first, Jason. And so, rent to retirement, we're a turnkey provider, and that's a really broad term as well. It's a buzzword, turnkey, and a lot of people have different perception of what that is. But we mainly focus on new construction assets, really built to rent. So, in mainly single family, small multifamily. But our motto is to make the best deals across the country accessible to everyone, and handle everything for you in your investments. It doesn't mean they're 100% hands off, but essentially our team scours the market, scours the U.S. to find the best investment markets. And this is a handful of criteria that need to be met to be a market. Like we want to be below the median house price point, which is around $400K. We want to focus on new construction assets between that $250,000 to $350,000 range that have an undersupply of housing. That means there's going to be strong demand. I mean, there's markets, most of our markets have double-digit appreciation both in rents and home prices year to year, even over the past few years where interest rates have been elevated. It's all about supply and demand being in those areas. We want to be in areas that have population growth, economic growth, diversity of industries that are tax favorable, both from an income and a real estate perspective, that are landlord friendly. So we work a lot in the Midwest and the Southeast. Basically, we renovate or build a house, lease and manage it for our investors. So you as an investor, regardless again of your experience level, of your time involvement, we have a lot of people that are busy professionals that want to own real estate, but they don't want to buy themselves another job having to flip a house or self-manage it, especially from a distance. And we have a lot of people where their local market is too expensive to invest in. It just simply doesn't make sense or pencil, just like us being intentional on where we invested. So it was important for us. So making that accessible to everyone and giving them the tools and resources and guidance on like how to strategically build a portfolio. A big piece of our business model is helping investors build out a strategy and a plan on, and that's different for every person. Some people want to own one house a year. Some people want to have $10,000 passive income a year. Some people want to have significantly greater than that. It's based on you, and then helping you map out a roadmap of like, all right, how do you build a strategic portfolio diversified all across all the different markets where we operate in, or possibly otherwise, that can help you ultimately accomplish your goal. and help you along that path. We don't charge investors anything. I mean, we make our money through building and selling houses. That's so this is about offering good products to investors where they are repeat clients, right? They come back and continually invest. So that's our business model. And everyone's in a different point. So I mean, if you're someone who's just thinking about getting into real estate, or if you're thinking about investing out of state for the first time, we'd be happy to have a conversation with you and just see what that picture looks like. Again, we don't charge investors anything to work with us, and we have a ton of information we put out there. So we have a great podcast, YouTube channel, things, doing all sorts of market data and research as well. So, and then kind of dovetailing into the first part of the question, which if I recall correctly, was you're asking about, or maybe say that again. Are you asking about why real estate, like that transition from me as
more just kind of how that fit into, I think you were doing real estate for yourself, and then created a business out of it. So I guess
right.
At what point in your trajectory did that become a piece of the puzzle where you were going to start doing this for other people?
Right. Yeah, the other people aspect was key. So it was an evolution over time. I never. We have a very large portfolio today, and this is personally. We don't raise capital. We don't have a fund. We're not a syndicator. Like, this is just my wife and I earning income, whether it's from the business, career path, whatever it is, and then putting it into real estate, maximizing our tax benefits, having huge tax deductions, taking that capital we would have otherwise paid in taxes, reinvesting in real estate, buying real estate that is in good areas that appreciates well. And guess what? Taking that equity, reinvesting it in more real estate, whether that's through a sale of it, doing a 1031 exchange, whether it's a HELOC on the asset, cash out refinance. We're saving up our cash flow, and then we're reinvesting our cash flow, right? So that's kind of this scale up trajectory. We built our portfolio on single family residencies in growing markets. Those appreciate very, very well. And then, some of those, we still have a lot of single family today. We sold a lot of those and scaled up into more multifamily. And more, like we have a lot of commercial assets that are retail centers, industrial centers now, even though we still always hold a level of single family houses and residential properties, we scaled up through all those methods. And people saw that throughout. This is just what we were doing through our entire investing journey. And today we have a large portfolio that net cash flows over $1 million per year annually. And that didn't happen overnight, but it also didn't take a lifetime to accomplish. And we were very intentional about still investing that, still doing that, right? So people saw that over time. But I say that, Jason, because my goal was never to get there. That was never a goal of mine. My goal was always like, be smart with my money. And then I liked real estate and I saw the benefits, and then I just reinvested it, right? And I just kept going down this path. Yeah. But it was very early on where people saw that. Even the first few houses that I had, I mean, guys in the military even that I, were just in the clinic with me, were saying, like, asking questions, even the first year of like using a VA loan. And I was always very happy to talk about our real estate investing. I was always the person that was very eager to learn as well from the people that were more experienced than me and ask all the right questions. And so we had investors like within the first 2 to 3 years of just doing what we were doing that were interested in partnering with us. Mm-hmm. But once we kind of had that foundation, it first started like friends and family and colleagues that were like, hey, we see the success you're having in real estate within those first few years, especially as we started to invest out of state. And like, that's a concept people can understand, is how are you being successful investing in these markets? Well, we built our teams there. That wasn't easy, but now they can leverage the teams that we've established. And they were just like, hey, like, can we invest with you? Can you show us what to do? We don't have the time. We don't have the experience. And that allowed us to really, we saw the demand. And so from there, we're like, oh, there's a lot of people actually that need a service where they can invest in markets that make sense for them, be more passive in investing. And so we just opened it up. We've been in business for about a decade now. And that's when we first like branded, and we're like, okay, this is something that can help a lot of people. But even before that, we had a lot of people that were investing, alongside of us. But it just came from the success that we were having investing. I still worked as an optometrist for many, many years while we had a full scale business. I scaled back, I was full time, and then it was like 3 days a week, 2 days a week, 1 day a week. And then now we're still licensed. We work on a volunteer basis and have like humanitarian efforts, but to transition over time. Real estate's a beautiful thing because you can start it as a side hustle and you can invest while working a full-time career. And, you don't have to retire yourself early. Some people want to do that. Some don't. Maybe some people want security. Some people want to scale back or retire a spouse, so real estate can be all of those things.
Yeah. Yeah. And you mentioned the word compounding before, and I think that the intentionality of what you've done, and just sticking with it over time, and continuing to uh, buy more real estate is like, I think people get stuck on the thought of, oh, I buy this one single family home, or I buy this one even duplex or triplex or something. It's like, it's going to make, maybe it makes me a few $100s a month. And they're like, but that's not going to change my life. But the thing that they're missing is like, you don't stop there, right? Like, it's not generally meant to be a one-time thing. Like, you can make money on one single real estate asset over time, but if you're really looking to get to a point where you can have $1 million of passive income, and I think that people just, worth pointing out there is like, most of the time that's pretty much tax-free cash flow coming off of the real estate. And so it's like, it's even better than making $1 million in your job. And if you back it up, it's like, okay, if I make $100,000 in my job, I probably take home 60, 70,000, depending on where you live. Well, if you can make $100,000 in passive cash flow, you're making $100,000 in cash flow. Like, and maybe you pay 5% on that. Like, and people, they look at, okay, I make this much now, and I need to make, so I need, like, they don't do it because they say, especially if they have a high salary, I got to make X number of dollars and I need it to happen tomorrow. Like, that doesn't happen, but it is achievable over time. And understanding how that tax savings plays in is like a hugely important piece of that puzzle.
I love it. We call it tax-free cash flow. To your very point, like, you should be, that $100,000 you take home, yeah, it could be the equivalent of earned income. Yeah, 150, 160, possibly more. And that's huge, right? That's like,
Right.
people, that's the biggest way to give yourself another raise, and to be
Yeah.
strategic, is to reduce the tax liability that you're paying on your current earned income, and and buy assets that have, tax favorable incentives around them. So real estate's the best. I'm biased, of course, but hey.
Yeah. Yeah. We both, but also, I mean, I think that it coming from the medical field, the that's I mean, it's hard to call it a problem, but a lot of people in medicine, like doctors, and uh, they make good money, right? There's a good salary, but a lot of that goes to taxes. And so, yeah, being especially aware of that, and looking at some of the strategies that can help you with that, you could actually work less, take however you want to structure your life around it. Like, using these strategies is super impactful to what you want to do in the long term. You said you also manage for people, so they can come in and buy assets from you as well, and you manage, and so that it is, largely passive, but it's not. You specifically said it's not a syndication. So these are things that people can hold as long as they want, right? It's not like, this is a 5-year turnaround or 7-year turnaround or something. This can be, they can just keep accumulating over time, right?
Yeah, that's correct, Jason. So our company doesn't physically manage. We did it one time, but we partner with local property managers
Yeah.
that do a great job, that we personally use, and we vetted them. And you don't have to use them either, but most people do. So, but there's management in place. That's full service. You are 100% the owner of the asset, and so you have 100% control. You can hold it as long as you want. You can sell it. You can do whatever you want with the property. I would say the average. That being said, the average holding period is probably between 4 to 6 years. Just like we talked about, the scalability aspect over time is that, you may invest in a single family asset that's producing good cash flow or whatever. Again, we focus on mainly new construction, so you shouldn't have a lot of capital expenditures or maintenance during that time. But there's this optimal period of time where you've had some appreciation in the home, the tenants paid the loan down, so you have equity. Maybe it makes sense to sell that in 1031 exchange, or whatever the case is, to be able to grow your portfolio without injecting more capital into your portfolio, because capital's most limiting factor. So it's all about the plan. It's all about the strategy. I mean, that's the big piece of our business that I think people find value in, is because you can buy houses anywhere, right? And you can find management, you can build a whole team by yourself. But we've already researched the markets, we've already established the teams. But the key benefit, and I do want to mention this too, is that our company does very specific things that no one else does that will, I think, is worth pointing out. So with the new construction assets, these are mainly single family or some small multi. One, we're builders, so we actually do build some of our inventory. That's a small portion of what we do, less than 10% of what we sell though. And we'll do between, 800 to 1,000 transactions annually across the 18 different markets we work in. The majority of the houses that we're selling through our marketplace are actually from regional and national home builders. These are builders you're already familiar with, like Toll Brothers, D.R. Horton, Lennar, Century, LGI. So, but what we do is we go to these builders in markets that are growing and thriving, where there's rental and sale demand. And we actually partner with those builders with their wholesale divisions, because our community as a whole is buying hundreds and thousands of houses annually across the country. We're able to work with them and buy and get wholesale type of discounts on the properties that you as the individual would not have access to, but then we're able to pass those discounts on to you. And that's significant. It's generally between like a 6 to 12% incentive. So on a $300,000 house that has a, say, 10% incentive, you could get a $30,000 price reduction on the house to have immediate equity. You actually could get $30,000 cash back at closing if you wanted to cover half of your down payment. That's completely up to you. You could use it to buy the rate down into the threes at this point, which the Fed is never going to get us back to like have crazy cash flow. These are incentives and buying opportunities that allow you to be a strategic investor, not only participating in the markets that make the most sense, but actually having unique buying opportunities that you want to have access to on your own. We also have lenders that will do true investment property loans as little as 5% down. On multiple investment properties, there's no PMI on these loans. So these are portfolio loans. We're not talking about FHA living in the house. These are true investor loans with 5% down. There's no prepayment penalty or PMI. Those are 30-year loans. So I've just threw all that out there to just inform the audience that our goal is to help people be strategic investors, making good investments in markets that are thriving that they wouldn't have access to on their own, but also help them build out a strategy and a plan. Because we do have a lot of those doctors that are earning high income, that are paying a significant amount of money in taxes. And it's like, how do you do that? How do you offset that? Well, they can invest in real estate and either use as a real estate professional, or their spouse is a real estate professional, or if they can't achieve that, go through a short-term loophole. I mean, there's all sorts of ways that they can participate in accelerated depreciation and like offset their active income by hundreds of thousands of dollars potentially. So anyways, those are some of the unique things that we do and help people work through.
Yeah. I think those are all those strategies come into play. It's important to consult with your CPA about this. We're not not tax advisors, but having put these strategies to use, have learned a lot about them. So I think it's all. The point is, and I think this kind of goes across even, all the different real estate podcasts and things like that. The beauty is that there's so many different ways to do this, so many different ways to have success, so many different ways to set yourself up for future financial freedom, using real estate as a vehicle. It's not the only vehicle, but it's a pretty reliable vehicle, and one that many people have put their own spin on to find that level of success. So I think really good for people to understand that these things are out there. And I love that you provide that, sort of level of advice, like an advisor to your clients in terms of just overall strategy and plan. And it's not just here, buy this house, figure it out. Like you can do that, but a lot of people do that on their own and get a little bit disenchanted with real estate because they have a major repair they didn't expect, or whatever the case may be, a bad tenant. All of those things can, put a bad taste in your mouth. But if you have someone kind of leading that strategy and frankly, just being honest, like, these are things that will happen. This is how we mitigate those risks. This is how collectively over time with a portfolio, one bad resident doesn't ruin you. Like there's all kinds of ways to navigate, and having that advisory component of it, I think is super high value to your clients. So that's great. Um, well, Zach, let me switch gears here. I want to ask you the questions I ask each guest, and the first one is related to the name of the show being "Know Your Why." And so I always ask every guest, what is your why? Obviously, have had a lot of success for yourself and your family, and you're helping people achieve that same success. But what kind of keeps you motivated and moving forward?
It's all about buying time back and having security. I think most people would agree. Like everyone has that why to some degree, but I'll share a little bit more intricate about details about my story of what that means. I think most people, Jason, when they're looking to invest in real estate, they want maybe some additional streams of income, some level of financial independence. Some people want the whole idea of like retiring early to not have to rely on their job, even if they like their job, right? That was never me. I actually really enjoyed optometry, and we still practice it. I mean, some people stop me and they're like, "Oh, I'm so glad you found your passion and like really found out that healthcare wasn't right for you." And I always correct them, like, that's not the case. Like, I loved what I did. I love helping people see. We still do that on an international basis, establishing cataract clinics, and helping to serve like. But for me, it was all about. Like my parents were electricians. I didn't come from money. My mom was usually always a stay-at-home mom. She worked a little bit, but she really enjoyed and valued family time. And my dad worked extremely hard to provide that as an electrician. Electricians do much better today than they did a while ago, but and all the trades do, I
Different
think.
landscape
But
there.
yeah, but he, it's like we didn't we didn't we didn't come from money. We weren't poor either. I would say my dad just worked really hard, and because of that, he was never really home. And he always told me, he's like, he always talked about retirement, right? And he was always like, "This is when I'm this, like, I'm gonna have this amount of, like, we're gonna have this freedom. We're gonna go do all this stuff as a family, and like when I'm this old, and I'm gonna punch the ticket." And that was like a dream of his. He'd talk about it all the time. And that was what he's working towards his entire life, and he sacrificed a lot of time in between that. And of course, before he got to that age, he got cancer and got really sick. And I just watched him do that entire time, and he never was able to accomplish that. And so that like really is a flip the switch for me. I was like, and he always told me, he's like, and they told me not to be electricians, but they're like, work hard now so you can. And they didn't know real estate. They didn't invest a lot in real estate, but they were always like, work hard now so you can enjoy, you have more freedom later. And so I really took that to the nth degree. It's like, I'm going to hustle my ass off right now, but also I'm not going to just like wait until this future time where I may be healthy enough to enjoy life. Like I want some of those things now, right? So that was really a big why for me, and it still is. I have young children now, and I want to be able to, and we are able to now spend more time with them. Next year, we're moving to Indonesia to spend 6 months there, and just do that because my wife wants to do that, and so that's a big piece of the why. And I would say, coupled with the fact that I've always just had a strong determination to hustle and work hard, and I've loved real estate. And it's just, the more I learn about it, it's a lifelong journey. The more you learn about it, it's just like you said, there's a lot of different things you can invest in, a lot of different things you can do in real estate. But it's like real estate is the most strategic way when you apply all these leverage, tax benefits, cash flow, like all those things. I think it's the most proven path to wealth. So that's a little on my why.
Yeah, no, I think, yeah, there's a lot of talk about wealth and financial freedom and all, but I mean, ultimately it all comes down to time, just wanting more time to do what you want, with family and travel and whatever it is you want to do. That this is a really great strategy to get you there. So, Zach, when people hear this and they want to connect, what's the best way for them to reach out to you?
We just want to drive everyone to our website, Jason. That's renttoretirement.com, renttoretirement.com. We have our own podcast. We put out a lot of information on YouTube, a lot of market data. If you want to connect with our team, again, we don't charge investors anything. We'd be happy to just, educate you about the different markets. If you're listening to this audio, you can also text REI to 33777 to set up an appointment. And again, we'd be happy to, just talk about lending options, market data, your goals and strategy, and connect with anyone that's interested.
Fantastic. We'll get that information in the show notes, so people can connect with you. But thanks for coming on the show today. Thanks for sharing everything that you did. Like I said, the strategy, people use real estate as a, I think when people say invest in real estate or whatever, they don't necessarily recognize how many different ways that is achievable, and you've defined a very good path, a very successful path, and are helping other people do that. So I appreciate you being here and sharing that with me and my audience. So thank you very much.
Pleasure's all mine. Thanks for having me.
Absolutely. Folks, I know you're going to get a lot of value out of this. Please make sure you connect with Zach, check out his website, and please like, rate, and review the show so we can get more great guests. And as always, thank you for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?